Hi, everybody. This is Michelle, and I'm here with Mark Sorensen, the founder and CEO of Royal Fund Management and 401k Maneuver. So, Mark, we get a lot of questions from 401k Maneuver readers, and one of those I'd like to address today is, what is a Roth 401k? So, read a lot about, there's a regular Roth IRA, and then there's this Roth provision inside of 401k. And would you please explain to us what the heck it is and what's the difference between the two?
Sure, and maybe talk about a little bit who should do which, right?
Exactly, that'd be great.
Okay, for a long time, the benefit of the 401k, of course, was tax deferral, meaning that when you defer money from your pay at work into the 401k, it goes in on a pre-tax basis, meaning that you're not actually paying taxes now on the money that goes into the 401k. The idea was that you'd pay taxes in retirement when you're utilizing the money and maybe at a lower tax rate, which may or may not be the case.
Right.
And so for years, once the money is in the 401k, it grows tax deferred. And then when you pull the money out, that is when you pay the taxes. The problem with that is that you're paying taxes not only on what you originally contributed, what the employer may be contributing in the form of a match or profit sharing, but you're also going to pay tax, ordinary income tax rates on all the growth of the money over the years. So not terribly long ago, there became what's called a Roth provision, if you will, inside of 401k. Not every 401k offers it. You'd have to check with your company to find out if they have the Roth provision. But the Roth provision allows you to put after-tax money into the 401k. In other words, you go ahead and pay a little taxes now to put the money in the 401k, and then all the growth of that money grows tax-free and then can be utilized in retirement tax-free. Now, one common misunderstanding, Michelle, is that all of the money goes on in the Roth side if you choose the Roth provision. Only what the employee defers goes into the Roth after tax, and therefore can grow tax-free for the future. Any company match or profit sharing goes in the traditional pre-tax side. Okay. But saving for retirement in a tax-free basis, depending on your age, and we can discuss that a little bit maybe, obviously growing money, paying a little bit of tax now, so that the money grows tax-free for your future might make a lot of sense.
So let me, if you can clarify this for me. So there's a traditional, inside the traditional 401k is this Roth provision. And so any money I have to, as the owner of this 401k, I have to decide how much is going toward what. But the caveat is that any employer contribution, like the matching, would go into the traditional side of things, correct? So it's still one big 401k with a provision for the Roth inside of it.
Yes, the company, what's called the record keeper, the person that keeps up with all the data in the 401k, when you get your statements, you would see how much was after tax and how much was pre-tax. But the pre-tax contributions, even if you chose all of your deferrals to go in after tax in the Roth provision of the 401k, anything the employer is contributing would still go in pre-tax. But in a way, that's good, because then you've got some of the money in the 401k that's after tax and some of it that's pre-tax.
Got it. All right. Well, then let's talk about a little bit about who's this right for, this Roth 401k provision.
Well, I would suggest that most everybody that has the Roth provision probably ought to take advantage of it. And I'll explain why, but let me start with, obviously, anybody young. Younger employees should pay a little bit of tax now on what they're contributing, so that it all grows tax-free. For example, if you put let's say you're a Google employee and you own the stock at $1. Well, it's obviously gone way up. Would you rather that be tax-free or have to pay taxes on all that money? Well, when you originally made that contribution, how much tax would you have paid on that $1? So in other words, you're only paying taxes on the contribution today, and then all the growth is tax-free if you participate in the Roth provision within your 401k. So why would I say almost anybody? Well, Michelle, it goes to what we were just talking about. Let's say you're fortunate enough to work for a company that matches the first 4% or something like that. Well, their 4% is going in pre-tax. Your 4% deferral that you've elected is going in after tax. And now you've got both working for you. But because you have both, I would suggest that even if you're 50 or 55 or 60 years old and still going to work for another 5 or 10 years, why not accumulate some after-tax money in your 401k,
Right.
remembering that only what you're deferring is after tax anyway. Anything that the employer is putting in, whether it's a match or profit sharing contribution, is going in pre-tax. So I would argue, again, this is just my opinion, that almost anybody that has the Roth provision, why not pay a little bit of tax today in order to have the growth of the money tax-free later in life?
Agreed. Yep. Sounds good to me. Who wouldn't want that, right? Okay. So is there anything else that about this Roth provision that some of our viewers might need to want to know or need to know?
No, I would first just suggest that you check with your HR person at work, the plan sponsor, the company, and find out if you have a Roth provision. At my company, interestingly enough, we didn't have one. And suddenly I realized that most of my employees were much younger than me. Why not give them the opportunity to save money tax-free for their future? And all of my employees, maybe because of the advice I gave them, but all of my employees selected to go into the Roth provision within the 401k, so that they pay a little bit of tax now, but have all that tax-free money going forward. Remember, even when individual retirement accounts were invented years ago, one of the selling points was the tax deduction for making the contribution.
Right.
Well, the same is true with the 401k. What you're putting in the traditional 401k, you're not paying taxes on, but you're creating what might be a tax time bomb down the road. So even though the reason for doing a 401k is oftentimes the tax break you get up front, I would still argue that paying a little tax on the contributions today so that all the growth is tax-free in the future would likely be a windfall in retirement.
Absolutely. All right. Well, thank you so much, Mark. And for those of you watching, head over to 401kmaneuver.com. Check out, we have a great blog there with lots of 401k advice and just general financial advice. So thanks again, Mark. Appreciate it.
Thank you, Michelle.